Good morning. Welcome to the Traders Workshop. You know what we're going to do. We're going to talk about earnings because it's earnings season. That's all there is to it. So, big one today. Everyone knows it. It's Amazon coming out tonight after the close. We're going to break it down. We're going to have the no-go trade and the up and down trade. You watch and see what happens after the bell. Do it. Feel it. Feel it.
It's going to come on.
You never know. Feel it. God damn, is that fun?
This is the only show where there's like three genres of music, one after another.
I know. But
like New Age, exciting, Yellowstone.
I know. The Yellowstone part is just my lifelong dream to own a ranch and be a cowboy.
That's why you're trading options.
That's why I'm trading options. Good morning, gents. How are you? Nice to see you as always. Mark, you look like you've got a nice sunburn/tan. Where'd you go?
Yeah, the lighting in this studio is just all off. I was skiing this past weekend, though.
Oh, nice. Okay,
maybe a little windburn.
Awesome. Jason, thanks for the hat. I know it's in the mail, but I'll get it one of these days.
I mean, this was custom made, so I think it might take some time.
All right, I'll get it. I'll wear it on the golf course, I think. All right, let's get busy. So, the earnings play. We're talking about Amazon today. I know it gets a little repetitive because through earnings, but earnings are an important time, and a lot of retail traders love to explore how to take advantage of earnings with the various implied volatility differences between months, right? So I know Mark is Mr. Puppy Downer and doesn't like earnings, and it's what did you call it before the show?
I think it's a mugs game. I think unless you have structural alpha, you're just feeding the beast.
Okay, he's going to be there's no such thing as Santa Claus guy. And then Jason, you probably have a play too, I'm sure. It's something you like to do. I have a specific thing I like to do because I never know which way the stock is going to go. That's not my gig. So I pick both ways, right? Oh, and by the way, I know we're supposed to go back and look at Tesla. I killed it in Tesla. We'll talk about that after Amazon. All right. So, any thoughts on Amazon just to start? You guys have a feeling at all, or did you read any of the report? Blah blah blah. Anything at all? Oh, I should.
So I could give you some stuff because I like to look first fundamentally at historical earnings using our good friend Matt Amberson's ORATS tool.
Yeah.
He has a lot of earnings data on there. Amazon tends to push the limits of option dealer pricing. So last quarter, they crushed it in earnings and had the expected move up, like almost exactly.
Okay.
Other than that, about half the time, it exceeds either up or down. It exceeds the expected pricing.
Yep.
And when it doesn't exceed it, it kind of gets close to that expected pricing quote. So in short, I would expect volatility according to history, and then I kind of supplement that with my Voland data, and my Voland data is saying that there is a lot of positioning that when implied volatility comes down, we should see a bullish move in Amazon. So if I were to do your double calendar, I might lean a little bit to the upside.
Okay, so good. That's good to know. We'll talk about how you lean with the double calendar in a second. And Mark, you don't like to play this game at all, right? So, just basically you're drinking a Grand Bordeaux during earnings season.
Yep, and enjoying whatever ride that adds, the 2.7% weighting to the S&P 500.
Okay, got it. All right. Okay, let's get into it a little bit then. I broke this down on the Remarkable. Okay. I showed Jason this before the show and he said, I can't read it. I said, what do you mean you can't read it? He said, your handwriting is like chicken scratch. I'm like, okay, I'll give you that one, but let's see what happens here. We'll do one share with the Remarkable, then we'll go to Tradier Pro and take a peek at it in real life. Okay, actually not real life. It's going to probably not be ready yet. Anyway, let's go to the screen real quick. Okay, what is this, Mark? Do you think this is Trick and Scratch?
I can read it. I've done enough of these shows with you that I think I can read it.
This is me going nuts. This is how I kind of look at things. This is my little back of the envelope calculations, right? All right, so here's what we got. Right here, we have the front month implied volatility currently. And this was actually last night, so just bear with me. Then we have the next month, the second month implied volatility. Now, what I was explaining before is that if you sell this front month volatility and you buy this back month volatility, it isn't the average of the two volatilities that you are purchasing. It is another volatility that is put together by some fancy equation that someone like Jason figured out while he's in the bathroom one day a long time ago. Okay, that's what it is. We are going to go over that calculation on another show because it's very involved. Okay, so technically what I'm saying is that the sum of these two, or the combination of these two, could mean that you're actually buying a volatility less than this second month volatility, depending on how different these two are. Does that all make sense in layman? Okay, perfect. Now, expected move. Here's what I like to do. And again, this is a thumbnail. I like to take the at the money call and the at the money put, add them together, come up with a value. I did all that, 960, 910, 1870. My little nasty motto is, it isn't rocket science. Just get close, like dropping hand grenades. You're going to do damage if you get close. So you can make this 19, you can make it 18 and a half. It doesn't matter. Just get close. Anyhow, when you add and subtract this expected move, right, from the at the money strike, which is 237.50 last night, again, bear with me, you're going to get 218.80 on the downside, and you're going to get 256.20 on the upside. This is the expected move up and down. Now, we don't know which way it's going to go. That's why we do a double calendar, which means I'm going to do a put spread and I'm going to do a call spread all in one. Mark, can you help us, for the beginners who are tuning in, what a calendar is in the first place? Someone might not even know what that is. Can you tell us what a calendar is?
I would broadly classify a calendar as a position across different months, that you are long a back month and short a front month, or vice versa, that you have some sort of time spread on, between different expirations.
Okay, and the critical thing there is the calendar part of it is the same strike. Would you agree?
Yes.
Because if it's not the same strike, it becomes a diagonal. So that's
sure.
I just want to make that clarification. Okay.
I would say a diagonal is like in the genus, phylum, species, whatever. I would say a diagonal is a subset of a calendar.
Okay. Yeah, they're both calendars, but the important part about the time spread is it's typically it's defined as the same strikes generally, and the diagonal are different strikes.
Diagonal is if we tried to mate a vertical with a calendar.
Oh, look at you! Isn't that fancy? Yeah. Okay.
Keeping with the biology analogy here.
Right. So okay. So those spreads I love during earnings because I'm actually buying such a cheap implied volatility. Okay, so I love doing those. So what I'm going to do is I'm going to do something crazy here. Okay, I'm going to go to the screen of Tradier Pro, so we can go back to our look here. Jason, tell me a story.
So my kids have delayed opening today, and it only rained. I swear they're going to just they'll give you a delayed opening if it's too sunny. I don't know.
Yeah,
they canceled school for us yesterday before any snow even fell.
Yeah, kids have gotten soft. We're getting better though. Don't worry. All right, let's go to Trade Hawk real quick. I said Trade Hawk. My God, I can't say Trade Hawk because it's Tradier Pro now. Sorry. So what I've done here, and if you can see this, I've created this spread that I talked about. Okay. Now I'll explain it on the screen. Let me get this bigger so I can see it. Okay. Notice the front month implied volatility. This is what I told you before. It's now 145 versus 62 and change. So it's actually better for us now. Okay. So the higher this front month gets relative to the back month doesn't keep pace with this because we have event risk in the front month, right? Meaning we're going to have a big move and it's only one day to go. So that vol is defining, this kind of move. The next month, kind of part of the move, but not as significant as a front, and it kind of pans on out as you go out in time. So someone once asked, well, Lex, why don't you do this one or this one? I don't think that's a bad idea. What I try to do in these things is get the cheapest dollar price. And if you can see it on the screen here where my mouse is, 134, let's call it 135. That's really, really cheap, right? My God, that's what I can lose on the spread. Now, either you guys have an idea on how this spread goes horribly wrong, relative to the earnings. Go ahead.
Amazon's earnings blow it out of the water, so you end up going much further than 20 points away.
Okay, perfect. So I agree with that. Mark, any thoughts on that before I move along?
I think you can lose, to Jason's point, on the gamma, and then there's also like a Vega, a vol loss that could happen too.
Yeah.
That like you are also exposed to some Vega risk with this.
Yeah, a little bit. And, and again, when we do the calculation on one of the, upcoming shows of this, you'll see how wonderful this could be. It's not as bad as you think. I got a mic problem. I think the risk I've seen with these where I lose money is the big blowout or massive, miss, and it's a bomb. So whenever you get through these strikes where you're short in that front month, way, way beyond them, that's when I have trouble. Now, we did Apple a couple of weeks ago, or whenever that was, and it didn't really move a lot. I didn't get much move. I want this stock to go to one of these short strikes. Again, I don't care which one, because I have no idea which direction it's going. But if it goes near one of these, that's great for me. Why? This front month has to die a fast death. It's only got a day to go. Applied volatility is going to come down after the news is out. These are going to get creamed. The second month is already it's not cream, but it's already down there a little bit. So it's going to go down for sure. But the speed of that front month, or the really collapse of that front month versus the second, you're going to have a nice little thing. So I've seen where we have even a win in between the strikes without a big move. Now, it's not a big win. It's $1 here, $1 there, 50 cents, 70 cents, not massive. When I get to the strikes, though, on the shorts on the front month, you can see $2 or maybe even $3 of profit in these things. So my point here is that the reason I love these trades is because very, very low debit expenditure generally, right? Great chance of making either side of this thing. And Mark, you got to be a trader of options to get out of this thing, right? So
that was actually, I was going to say, can I give another risk to this trade? Because I think we missed one. Exactly like you said, you have to be a trader of options. There's execution risk in this, right? Like you have a time spread on across 2 different months. And if 1 month expires, like you're naked long a straddle. Like if you don't manage this trade at another point, you can't just set it and forget it. Let it expire no matter what. You get hit by a bus, you could lose money multiple ways in this.
100%. So
in addition to being hit by a bus.
You get hit by a bus. The bus is not your worry.
So here's the deal. That's a great point. So what I found that this takes tender loving care, this kind of trade. You absolutely have to take care of it. So I think you're right. So what happens if you have 10 of these on? I'm just making that number up. And you have, you buy it for $1.35 and it's trading $2 after the earnings. Do you get out of all of it? Some of it? What do you think? Any thoughts on that?
I mean, so because this is a Thursday evening earnings as opposed to like a Monday when you have like 4 days to expiration versus, 1, you only have one trading day. If this only moves $2, I think you got to get out probably pretty quickly. As soon as that front month decays quite a bit.
Yeah, 100%. So I like that idea. The other thing you have here, okay, I want to make sure we make this point. The other thing you have is that you have the benefit of time, hence the name time spread. So technically, is if you don't get the full move and you get a little bit of oomph, you could, look, I'm not saying to do this, but you could take some of the front month short off, and you've got 8 more days with a long strangle that you could pay for with the front month premium. Okay, I've done that before. It's not my favorite thing to do because you could lose on both, and then you're screwed, right? So that's the trick there. Now, the other thing I want folks to know, we have some questions we're going to go to in a second. The other thing I want you to know is that If you get this move to one side or the other, let's say it's a down move, okay, and the spread goes from 135 to $3, making it up again, right? I like taking off the put side of the spread, especially if it's beyond the full value of the 4 legs. So if I paid 135 for 4 legs and I can get out of 2 legs for $3, I've got a free play on the upside. Okay, so I will take off just the put side in this example and keep the call spread on. Now, hear me out. If the call spread doesn't work by the time the front expires, guess what I have left? I got a naked long call in an 8-day option or 7-day option after a day. It's free. It's a credit to me. It's a lottery ticket. If something comes out on Amazon, it goes up. I guess what happens to me? I make another fortune on that. So Mark's not liking this. I get it. Jason, I'm not sure what he does, but me being the little gunslinger that I am, and don't forget, I'm a cowboy. All right, I'm from Yellowstone, so I'm doing that. All right, let's hear it.
Cowboy, got it.
Let's hear it. Go. Do you like that or not?
So typically what I like to do again is I like to have I do butterflies and stuff like that. I don't like to deal with the front month versus back month implied volatility. I don't want that Vega risk that Mark is talking about. So typically when I do something, even if it's both directions, I would do a butterfly in both directions. I think also the wider the spread, like this is a 20-point move. That's almost 10%. I mean, that's 8-9%, right? The wider the expected move, the less I want to do these calendars, because if it only moves 2, you're probably going to lose a little bit.
Yeah. Well, that's where Mark's prescription of being, in the driver's seat can help. If you're right, if you only get a little bit of move, I always thought I'd get hammered, but I don't. It kind of holds its value because that comes down so much. So you gotta make a decision to wiggle out of it. You might lose a little bit, you might make a little bit on a small move inside. But again, going back to the gigantic move, that's where you really get hammered. And I've had that happen to me before, right? So.
Yeah.
Sorry.
Are Amazon earnings always on Thursday nights? Because I think Jason sort of mentioned this. That's like that's a different setup than if they were on Monday night and you're trading a weekly expiration.
Yeah, right. I actually love the Thursday night. I got to be honest. I got 1 day to go. Are you kidding me?
It's a very isolated trade. Like this is a lab experiment trade.
Yeah, this is my favorite of all time because man, I got Friday to worry about and I'm done. I love it.
I prefer doing something like this on a Thursday rather than Google earnings on a Tuesday.
Yeah,
because then the expected move, you have to account for the fact that there's 3 extra days of trading.
Right.
Then it's going to move anyway in 3 days, right? Like it's got additional vol, not just earnings vol.
Okay, now let me do this real quick. Let me show this question. It's a little bit longer. So this is a question from the audience. What do you guys think about Amazon puts? Thinking about placing a couple on it, given how tech has been falling, even when beating earnings. What do you think, guys, on that one?
It sounds like you have a different thesis than us.
Yeah, so it's a good question. Okay, so here's the problem. I'll just say this generally to accuracy cyclonic. The volatility is so freaking high in that front month. If you just want to purchase puts because of a down move, you could get the down move and still lose. Okay, so that's why I would be a prescriber if you have a directional bias here. My favorite is a broken wing butterfly. Okay, I'll just say it straight out because I'll pick that expected move value somewhere around it for my short part of that butterfly, and I'll probably make it so that the bottom leg is a little tighter to that and the top leg's a little bit longer if I'm bearish. This is puts, so that if it blows through, I'm going to make some money on top of it, right? That's probably my play because this vol is so high. I just don't want to eat that vol. You guys have any thoughts on that?
The answer, at least to a vertical, like
at least 100%.
At least to a vertical. If you're convinced that Amazon's going to open up in the 100s tomorrow, at least to a vertical, because then you're not risking as much and you get better gamma.
Right. Unbelievable. Okay, Jason, this next question's for you. I don't think I understand it. I think it's for one of your guys here. So.
Oh yeah.
I think he's talking about Wiz. You're the Wiz.
All the market makers.
Yeah. So what does this mean?
Trying to get them to
repeat
talk
so
to me
people
about
can-
their payment and charm hedging behavior. They don't want to talk to me. Any tricks on getting them to like me and talk?
Okay, so just restate the question so people understand what you're talking
Okay, it seems like Johannes is trying to get do some first person research, some interviews with German market makers to try to figure out how they're hedging. And my answer is, have you bought them dinner? Bought them roses? Maybe a nice bouquet, some chocolates for Valentine's Day, right?
Yeah.
Something like that. But no, they're not going to tell you what they're doing. Like, come on.
Yeah.
Don't worry, I won't do anything bad. Just can you tell me what trades you're about to make?
Well, it's fair though. Come on,
Yeah, I mean it's fine.
It's an edge. I like it. I like the question. So I'm trying to get this straight on as we speak here. So don't mind me. Did you hear the ding?
There we go.
Yeah, there you go.
Okay. I just got filled up.
Lex is in the market.
I'm in the market. All right. Well, I got in at 137. Let's call it 135. 2 pennies. We're not going to split hairs over. I hate dealing with weird numbers. So 135 is where I'm in. So note that I'm writing it on the remarkable. I got in at 135.
137.
I will document the trade that I do to get out. I'll keep a little log, and next time we'll run over it of how it gets out. Okay. So
all right.
We'll be good. All right. What else? Anything else? Mark, you had a little topic. We're not going to get to the whole thing, but let's lay it up for next time. You were talking about equity stats, I think.
No, me, I'm just doing boring research on buy and hold strategies. Nothing sexy like an earnings play.
Okay. All right. Well, yeah, the buy and hold strategy. Is it versus something else?
It's like a hedged equity strategy.
Yeah. Okay. Awesome. All right, good. Let's run a couple things, couple announcements. Find Jason at.
I'm at www.vol.land. I'm in a lot of places.
Well, tell them all. Let's go. Here we go.
If you're interested in option dealer positioning dashboard, you got www.vol.land, which is the best quality data out there. If you're interested in a registered investment advisory, you could go to www.addeumfunds.com.
No one's going to be able to spell that.
ADDEUMFUNDS.com.
Okay.
If you want to see me on Twitter, it's at WizofOps. If you want to see me on, I was on Schwab Network. If you want to see me on Tradier,
you'll find it. We're here every Thursday at 9 a.m. Central Time, USD. All right, Mark. Harvested Financial, I know you, and you don't need to say the www part. Don't be a
or the .com, but they're both implied. That's where you can find
they're
me.
implied. Jeez. Well, you could have a .ai or a .io. I've seen that.
Volland is .land.
Yeah. Oh, cool. All right, Mark.
Report.
Harvestedfinancial.com. Yeah. Tell them what you do real quick, just so we know.
I run option strategies for people, hedged equity, opportunistic short-term capture strategies, and a little bit of digital assets too.
Are you doing it with any other partner, would you say? Can you say that? Or
absolutely. That's the opportunistic stuff is our friends over at Peakbot running some short-term gamma capture strategies there.
Okay, so look up Mark at Harvested Financial. We are always on the hub.tradier.com every Thursday at 9 a.m. We love your feedback. If you want us to talk about a topic, don't forget to put that in the comments. Okay, these will be posted on YouTube. You can get these at Options Brew TV YouTube, and you can get them at Tradier Inc. Stay tuned. Some of that's going to change. We will let you know about it, but you can watch this in rerun and send us comments. We love that stuff. Give us a challenge. We might even do Stump the Pros in the near future, and you're going to get something really cool. Last announcement before we run, and I go pick up horse crap in the yard because I'm a cowboy, is that we're going to be doing a trading contest, okay? A virtual trading contest. It's in the works. Grand prize could be upwards of $35,000 USD for the winner. If that's exciting to you, make sure you comment on that. The fee to get into it will probably be about $9, $10, give or take. It'll be a 3-month-long fee. There's all kinds of cool things in it. It'll be real-time data, a lot of fun. It'll be dashboards and conversation and trash talk, you name it. But it's going to be a big deal, and it's in partnership with SIBO. and Polygon, among others. Okay. Sound cool, guys?
That sounds really cool.
And we're going to play too.
I was going to say, is Lex getting in there?
I'm getting in. We're playing, but we can't win. But we're going to play. Okay, Jason, you can win. Mark and I can't win. All right. What else? Is that it?
That's
Happy
all I
trading?
Can I get a happy trading?
Happy trading.
Okay, Mark. You guys
Happy
have
trading on happy Amazon trading. We'll be even more.
Right. Thanks everyone for coming. We will see you next week and with another great topic. Have a great weekend, guys. Talk to you later.
Cheers.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.